Hello everyone and welcome again to Jason's in the House. I'm your host Jason Parisella with Keller Williams Realty in Beverly. Nice to see you again. And today our guest is Ray Chouinard. He's with Mortgage Financial Services. He's a mortgage planner and also a certified
mortgage planner.
Certified mortgage planner. Mortgage Financial, he works out of the Danvers office. He also works in Topsfield, Newburyport, and the surrounding North Shore areas. Welcome, Ray. It's great to have you on the show.
Thanks. Great to be here.
Yeah, we had you on. Geez, we were talking before the
2009.
I think it was 2009.
Yeah,
so.
a lot of changes since then.
Absolutely.
Yeah.
There's been a lot. Now, let's talk about, well, first of all, why don't you tell us a little bit about yourself and your company?
Sure. So I've been in mortgage banking for 16 years. As you said, I work for Mortgage Financial. I work in Danvers and in Topsfield. My corporate office is based in Tewksbury, and Mortgage Financial has been around since 1987. So long track record of lending, primarily just in New England. And then myself, I live here in Beverly with my wife, Kristen. She's a nurse, and my daughter, Jordan, who's 12.
Excellent.
Yeah.
Great. So where is your, but before we get into some of the real changes that are happening, where is most of your business coming from now? Is it, you know, you're seeing most of the purchase market?
Yeah,
people
right
buying
now,
homes or refinancing?
Yeah, I mean, right
happening?
now, as we're filming this here in June, we're in the middle of the spring/summer purchase season. So I think a lot of people sort of took the winter off. You know, when we were buried under 4 feet of snow, people weren't out looking at homes as much as they were now. So I think everybody that took the winter time off, everybody jumped in all at the same time. So we're seeing a lot of purchases right now. I'd say that's primarily most of the business. Still refinances, working with a lot of past clients who I've worked with over the last 15 or 16 years. So it's been a decent mix, but it's definitely a very busy summer in the mortgage world.
So what did you find? How do you feel? What's your perspective on the winter? How that affected positively or negatively the mortgage market, and how things kind of, how they were during the winter, and then, like you said, through the spring and,
Sure.
and until now?
So I know everything in real estate is so local. So what we saw here in the Northeast with the bad winter that we had, a lot of the clients that I worked with, I think once we got to, you know, sort of the holidays, Thanksgiving, Christmas, they just put things on hold. And they said, you know what, I'm going to wait until the spring market. Now with the winter that we had, I think, and you probably saw this as well, a lot of people didn't really want to put their house on the market while you couldn't see the backyard.
You couldn't even see anything.
You couldn't see anything. You could only see half a house. So I think things got rolling a little bit later. So all of those people that put things on hold, and the people who are already planning on purchasing in the spring, everybody jumped in all at once.
Right.
So there's been sort of a logjam.
Yeah.
So it's very competitive. It's not uncommon to see something go on the market on a Thursday and have multiple offers and even over the asking price, you know, by the weekend.
So what are some of the things you're doing, you know, those viewers that are working to, currently looking to buy a house,
Sure.
working with a loan officer? I've heard from a realtor's perspective, as you mentioned, a lot of multiple offers. You have to be really ready to purchase a home and be, you know, ready to make the offer, and you're going to have a lot of competition. So,
Exactly.
From your perspective as a loan officer, how are you helping to make that buyer stand out, or work with the realtor to give that edge so that they get their offer accepted?
Sure. Well, it's incredibly important to be pre-qualified for a mortgage. So that's the first thing. So, you know, when I'm working with a buyer and they're going to put an offer in on a property, we give them a pre-qualification letter that they can show to the other agent and the seller that shows them that they're qualified for a home. We're also seeing things where I've heard cases where people are actually writing letters to the seller as well to say, here's why we want your house. We want to start a family here.
Right.
We really like your home. So they're really going above and beyond. It's such a seller's market right now that the buyers are really trying to do everything they can to stand out and make sure they get the home.
Right.
I think the difficult part is the people who just came into the market that don't realize how competitive it is. I feel like there's a group of people that have all lost a property because they still have that mindset that, well, if it's on the market for this, I'm going to go in, you know, X amount of dollars lower, not realizing that, you know, this house is priced to sell and it may go a little bit higher than the asking price.
Yeah, and I think you mentioned, I agree with you what you mentioned about a lot of times a buyer needs to experience it, because you could tell them as a realtor or a loan officer that you need to be ready, and
Exactly.
then they lose that first one.
Sure. Yeah. Yeah. I always tell people, and you know, the theme of what we'll probably talk about today as it relates to mortgages is just starting early. Starting early, getting comfortable with your numbers so that if I get that phone call on a Sunday and somebody's at an open house and they say, oh my God, I've been looking for 6 months and this is the place I have to have, they're comfortable with their numbers. We can take a look at them and they know that they can afford that mortgage payment. It takes a lot of the stress away. a lot of times we get those phone calls that people that aren't prepared.
Right.
They find the house first, and then they say, "Oh my gosh, what do I do now?"
Yeah.
And they're working backwards.
I would suspect too you see that maybe more often now. A lot of people are looking online. You know, they're doing their search well beyond they may even before they contact a loan officer or a realtor, and they may all of a sudden see a home that they love and they want to make an offer on it. And as you mentioned, at that point they haven't done the pre-qualification.
You know, it happens all the time. That person who is thinking right now, well, maybe I'll be ready in the fall or next year. Yet they're looking online, they're going to open houses, and then they find that place that they fall in love with, and then it's a mad dash to get them pre-qualified, and it's too much all at once. So I've always found, as long as I've been in mortgage lending, that the people I meet months and months before they're ready to make an offer are the best clients, because we can walk through mock scenarios, we can walk through, I'll have them send me emails of properties that they like, and I'll run some numbers and say, okay, let's say you bought this place for 10 or 20% down. Let's look at what your mortgage payment would be. People really have to get comfortable with the tax rates in the different towns too. Somebody looking at a $300,000 house in Peabody is going to have a lot different payment than someone who's looking at a $300,000 house in Amesbury, where the property taxes are a lot higher. So a lot of it is just preparing, getting them used to what their payment would be.
Yeah. Now, when someone starts looking for a home, I'm thinking of who's the first person they should talk to? I mean, really, who should they contact first?
I think in a perfect world, they would want to be talking to a realtor that can work as a buyer's agent, and they should be talking to a mortgage professional like myself.
I think it's kind of neck and neck as far as making sure, because even with the realtor can't do their job effectively if they don't really understand and what the buyer is comfortable with on their mortgage or the financing side.
Because I think most realtors, they want us to be the first step. So if, Mary and John Smith call me and say, hey, we're thinking about looking at a home and we want to run some numbers, we can go through all of their items. We can go through their financials. We can run a credit report. Make sure there's no surprises on the credit report that they're not expecting.
Right.
That's the first place to start, making sure that there's no surprises, making sure that they're going to be comfortable with their mortgage payment, and then turning them back over to the realtor to say, okay, now that we know what you can afford, let's work with your realtor to find out, what are your wants and needs? What towns do you want to look at? How many bedrooms, bathrooms do you need? Things like that, so that you can start working on the wish list. You never want to have somebody who's been out with a realtor or running around to open houses every single weekend, and then they find something, and then they give you a call, and it turns out they can't do something because now there's something unexpected in their financial picture that they weren't ready for.
Well, a good example of that is the taxes. So knowing what towns they're going to be looking in, and then kind of running the different tax rates and the scenarios, just giving them an idea of what they would pay based upon that taxes.
Well, especially around here on the, in the northern part of Massachusetts, you may have people that are looking at, a Haverhill, a Merrimack, a Newburyport, but they might be going over the border into, Portsmouth and Atkinson, and if they're not prepared, they may not realize it's apples and oranges. It's the taxes in New Hampshire are so much more, and what you need on the day of closing. New Hampshire has a state tax stamp at closing that we don't have down here. They take a lot more money for their escrow account at the closing. So even going 10 miles between Massachusetts and New Hampshire can be a completely different picture when it comes to your mortgage payment and what you need to do for a down payment and closing costs.
Right. So besides that, you're licensed so you can do mortgages in Mass and New Hampshire?
Mass and New Hampshire, So I'm licensed in Mass and New Hampshire. My company, I believe, every state in New England, but for the most, in Florida. I don't really do anything in Florida, but for the most part, most of my clients would be Massachusetts and New Hampshire.
Because I'm sure we have a handful of viewers too that, either they're going to be thinking of living in New Hampshire, or there's, they have a second home in New Hampshire. So is the process much different other than the taxes and things you need to look out for that way, or is it?
It isn't terribly different, no. I do have a lot of clients that we've done that. I've worked with them to buy their single-family homes here in Massachusetts, or work on a refinance, but then later on they might want that place. They might want that condo in North Conway, or the ski house over at Loon. We do a lot of that. And a lot of times it works in conjunction with your primary residence. You might be refinancing and taking money out to even purchase that for cash, or having a small mortgage. So
you just keep that primary mortgage on your primary home, and then you just refi and
exactly.
I see.
Yeah, but around here, Massachusetts, New Hampshire, Maine, everything is pretty similar. Once you start getting into different parts of the country, then it's just Florida, for example. Florida is completely different. New York is completely different. So I think that's why myself, and for the most part our company, We just try to focus on, our footprint so that we can do the best job that we can do and not trip over the different guidelines that the different states would have that we're not really familiar with.
Right. Okay. So let's talk about very specific things that are
Sure.
happening in the market now. And one of the things that we've heard a lot of from the realtor side is the CFPB, which I believe is the Consumer Finance Protection Bureau.
Correct.
So what does that mean to the consumer?
So the CFPB,
The bottom line, what is that going to affect, how is that going to affect people getting loans, and actually how it ties into buying a property also?
Sure. So the CFPB, they regulate not just the real estate industry, but they regulate credit cards, auto loans, student loans, things of that nature. So they're sort of the watchdog for the consumer. So
It's the whole financial piece.
Exactly.
Yeah.
So what that's going to mean in terms of real estate and mortgages is they're coming up with a big change starting on October 1st. It was actually supposed to be August 1st, and they just in the last 2 weeks bumped it out to October 1st. So starting in October, everything from start to finish is going to change a little bit. When I'm sitting down with a client right now, we're going through an estimate of their loan cost that's called the good faith estimate. That's going to change. It's now going to be called the loan estimate.
So the good faith estimate is going to be changed to the loan estimate. That's one of the big changes.
Absolutely.
So the name of the form's changing.
Exactly. So they're combining two different forms into one: the good faith estimate, and then what's called the truth in lending disclosure. Those are going to be combined into one form called the loan estimate.
Okay.
And I think it's a good change. Right now, the good faith estimate that we use came out in about 2009, I believe, and it's not great. It doesn't get into all the detail that I think a consumer would need. What's good about this loan estimate is it's very detailed, but yet it's very consumer friendly. So you don't have to be a mortgage expert to follow through.
So it's more understandable from the consumer side?
It's a lot more user friendly, absolutely. So that's going to be one change. Now
the truth in lending piece is all about disclosing the rate, your real rate and everything, right?
The truth in lending
form. So it's all your closing costs. What it's explaining is your closing costs and what your real rate is and how you
the truth in lending form is the form that most consumers don't like to look at when they're sitting in a loan application because it shows you that ugly number of how much interest you actually pay
over
the life of the loan.
Right.
Exactly. So again, that's being combined into what's called the loan estimate. So that's on the front end of things. So that's where I'm sitting down with people, 45, 60 days before the closing. We're going through that document. The other document...
Let me ask you one other thing on that.
Sure.
So when you sit with somebody up front, you give them this new document. Is there any type of percentage variance that, in other words, how accurate does that have to be?
The accuracy part...
Or is it just, can a mortgage company just write some numbers and get you to sign for the loan?
No.
And then they change the numbers at the closing?
Before 2009, that's a lot of what happened.
Okay. So a lot of 2009 prevented a lot of that.
Exactly. So what we use right now, that good faith estimate, there's a 10% variance in there.
Okay.
So there are some things that just can't change. So in other words, if I'm sitting down with a client and I say, your appraisal is going to be $375, your closing attorney is going to be $600, your recording fees are going to be $400, they can't show up at the closing, and now those things are hundreds and hundreds of dollars off. There's a 10% variance because some of the costs may change. The appraisal might be $25 higher or lower than what was quoted. The credit report, sometimes if we have to do a little bit of work behind the scenes, the credit report fee could go from $25 to $50. So it leaves room for little variances, but you can't just show up at the day of the closing and now there's $4,000 more than you were expecting, or your rate is a 0.5% higher.
I see.
So on the front end of things, we're doing that loan estimate now. And then
so it's the same 10% variance even with the new
same
procedures.
Thing, exactly. So the name of the form is changing, the format is changing, but that 10% variance will remain the same.
Okay.
Now at the closing table, what we've used for years and years, and if someone has purchased or refinanced, they've probably heard it referred to as the HUD-1.
Right.
It's a legal size form. It looks like a huge Excel spreadsheet that's in the tiniest font ever. It's not easy to read.
To understand it.
It's difficult. It's very difficult. So what's changing is that's now going to be called the closing disclosure. And what's good about it is it's going to mirror that loan estimate that people got at application. So really, if you look at your loan estimate, there's going to be section A, B, C, D, etc. Those are going to follow over to the closing disclosure, and you're going to see the same A, B, C, D. So the consumer should be able to sit there at the closing, look at their loan estimate, look at the closing disclosure, and be able to match the two up, which is good because you can't do that.
Yeah.
The biggest change that we're going to see is that there's now going to be a mandatory 3-day waiting period at the closing. So they want the consumer to have all of their facts and figures 3 business days before the closing.
Now, let me ask you something. Does that mean, how is that procedure going to work, do you think? Is that a phone call with the closing attorney, or is that going into the closing attorney's office and kind of doing a pre-closing, going over the documents, and then you wait 3 days? How does...
There's going to be a couple of different ways, and that's what we're going to see, as we get into this change.
Right.
We're going to see the answers to that come about. They have to be able to show. So the tricky part of this new guideline is that...
Well, let's step back for a minute,
Yeah.
too, because normally right now, this is one of the things I see from
Sure.
the realtor side. A buyer shows up at a closing, and most of the time, the package, they don't see the package until
Yep.
literally they're sitting at the table. They might have seen the HUD-1 settlement statement.
Sure.
But they don't see anything until they sit at the table.
Exactly. Meaning the package of documents that they're going
Right.
to sign.
So now we're talking about that. It's mandatory. It has to be available 3 days prior to the closing date.
Yep.
Yeah.
Absolutely. So the tricky part with what the CFPB has done for regulations on this is they want to know that the consumer has received it at least 3 days before the closing. So let's say you have a closing on a Thursday. They have to have that form by Monday, and we have to be able to show that they received it. Now, which is good. They should have their numbers nice and early, but the tricky part of that is going to be being able to show that someone received it. Now, most of the time, this can be done by email.
I see.
So we could email it. We could ask the person, please respond to acknowledge that you got this. Maybe it's done with like a read
Now, what are
receipt.
you actually sending, though? Is it that closing?
It's going to be that
document?
final closing disclosure.
That's
So
what has to be sent.
That's what has to be
Okay.
sent. So they have
Okay.
to know their numbers. They have to know what they need to bring to the closing table 3 business days. And there
Okay.
can be no changes. So right now...
So once it's 3 days before, there's no change between
Exactly. Because
then and
the way that
closing.
we've always done things in the real estate world is there are some things that trickle in at the last minute.
Right.
You might go to the property before the closing and maybe the oil company just filled up the oil tank. Now
Right.
you have an oil adjustment. Or maybe they've been talking to the town about, we need the final numbers for your water readings, and maybe those come in late. We're going to have to...
That can't happen?
That's not going to happen anymore.
So even oil adjustments and
Even
everything?
oil
So
adjustments.
if a seller doesn't put an oil adjustment on the HUD,
Mhm.
it's $300 for the oil fill. They're
Yeah.
not going to get their $300.
And that's part of what we're going to try to figure out how this is
So,
all going to work.
yeah.
So and that's a big one. Oil is not cheap.
It's a good
So-
example of something that could fall through the crack. Even the water and sewer adjustment.
Exactly. So it's really going to be everybody. Working. Your mortgage person, your realtor, your closing attorney. Everybody is going to have to be on the same page. It's almost like we're going to make the cutoff 2 weeks before the closing. Any of these things may need to come in 2 weeks
I
before
see.
the closing.
So you're really way ahead of it.
Exactly. And we know right now, typically how a lot of this stuff happens is, you may just go to the walkthrough the day of the closing or the day before. You kind of eyeball what's in the oil tank, this and that. It's not an exact science,
Right.
but everybody's on the same page that, okay, if the oil tank was just filled up, the buyer is going to pay that because the seller didn't get to use any of it.
Right.
So there may be a little shift. It may be where maybe realtors get in the habit of telling sellers now, you know what, why don't you go ahead and fill up your oil tank 2 or 3 weeks before the closing and
Right.
get us a receipt. We'll take care of that now. It still won't be an exact science, but it's a way to avoid, something
Yeah.
last minute. Closing attorneys will have to be more on top of just getting the seller's payoff, getting the final
That's a
water
good
and sewer
point, too.
readings.
You're relying on so many different people
Exactly.
in the process.
Yeah. So
That's
we're,
where it gets challenging.
So the tricky part, so again, 95% of people these days, we're all on email all day long. It's easy enough that if we send out the closing disclosure to somebody on a Monday for a Thursday closing, you would think that we could get a receipt that says, okay, yep, we've received it, everything's good. But what the CFPB is saying, they want to leave room for, what if somebody isn't on email? What if they're away? What if somebody's on a cruise ship somewhere? So they really want to leave time for this to be mailed out. So
Oh, I see.
what I think what we're going to do, and what I'm hearing is a lot of banks and lenders are going to do, is back it up even further. Make it 7 days before the closing, because the thought would be, if we do the closing disclosure, we send it out by U.S. mail, we have to figure it would take 3 days to get there. So then the consumer gets it on the 4th day, and then that mandatory 3-day clock starts ticking. So that's how we're going to approach it when we roll this out, is that it's really going to be, you need to have everything in order a good 7 days before the closing.
I mean, I'm wondering, just that one fact about delivering the package.
Mm-hmm.
Someone's away, how do you prove that someone got it? And
Exactly.
are people going to, if they really don't want it, they need more time or whatever's happening.
Yeah.
Is that going to be an out for the buyer to say, I just never received it? How do you know I received it? I was away, you sent me an email, wasn't checking email.
Exactly.
You sent it to my house, I wasn't there for 2 weeks.
That's why I think...
So I wonder if that's going to trigger some type of possible way for the buyer to have an out.
That's what we're all going to learn it together, unfortunately.
So, yeah.
But that's what we're thinking, is that, just like you said, there's really no way to know. I mean, they want to leave a buffer.
Unless you do certified mail, I guess, and they sign for it.
You could, but again, if somebody's away or this or that, yeah, so it's going to be tricky. We're going to have to, it's not just a matter of, right now what we have to do is we have to, when we have a mortgage application up front, we have to show that we've disclosed that to the client within 3 business days. They don't have to show that they've received it. We just have to date stamp it that it's been done.
Right.
The tricky part of this new regulation is going to be at the end, the consumer really has to be able to show they did receive it. And you're right, but the U.S. mail, they could say, who knows? Look at the storms we had last year. We had 3 or 4 days in a row with no mail.
Right.
We have to leave room for things like that.
Yeah. So anything else on the CFPB, the changes? Those are the two. So those documents up front and the closing document at the end. I think those are the two big.
That's really going to be the biggest thing.
Yeah.
It's just going to be, as we all learned from it once it starts in October, I just think that what's going to happen is people are going to have to realize they're going to leave a little bit more time. I think putting an offer in on something today and asking for a closing 30 days out, if you need a mortgage, is probably going to be out the window.
What do you think is realistically a good time frame between you put the offer on the house to the closing date?
I think it's going to be, 45 is going to be pretty standard.
Yeah.
Yeah. I think we're going to have to, because it's almost like we're going to end up losing about 14 days on the back end to make sure that we have everything in order so that we can get all of that paperwork processed in time.
Now what about, how does that affect, we see it all the time in the industry, a seller listing their home, selling, so you put your house on the market to sell it, to move to another house.
Exactly.
And you want to close on the same day. So you want to sell your house the same day, sell it to a new buyer, and then close on the new property the same day. How is that going to be affected by these new regulations?
Again, I think it's going to be a mindset.
As long as they both do it 3 days, obviously they each have to be doing it 3 days.
It's just going to be difficult because right now we know that it's not uncommon to have,
even now it's a challenge now.
Sometimes it's even like a 3 or 4 domino effect. There might be one closing and that person has to close to buy the new house and so on and so on.
Right.
It's going to be tricky. If one person in that domino messes up, they didn't get their paperwork, something happens, it's going to affect the other one. So I think unfortunately, again, as we all learn this, it's going to be something that, myself, the realtors are going to have to work through and say, listen, you may just need to make a plan that if something happens towards the end, unfortunately, it may be 2 of those dominoes might close, but if the third one has a problem and they have to redo the paperwork and we all have to wait for 3 days, it is what it is. There's really not going to be a workaround.
Right. So it still can happen. It's a matter of making sure even more, because it could still happen today. Sure. Making sure that you have a plan B, that if for some reason it doesn't happen. Yeah. Because you're talking about, like you just said, it could be 3, but if you lose it, it's another 3. So you're talking about a week, 6 days to a week, or a weekend. You could be... Yeah.
You could have your life on a moving truck.
I guess either move out and get everything out, and then you have to live somewhere.
Exactly. Yeah.
So there's definitely.
Unfortunately, I think we're going to see it. It's going to happen, and and we've always been used to it. There's always been back-to-back closings or 2 or 3 in a row. I think everybody at this time next year is probably going to have one story of somewhere along the way, one of those transactions had a problem, and everybody had to sit and wait for 3 days.
Right. Yeah. Interesting. So I think to kind of sum it up is what I would say that the forms from your perspective are very consumer friendly. Exactly. More I love the way it the same format with the first document you receive. You can compare it to the second document. Although there's some kinks in there that could possibly affect coordinating closing.
Exactly.
I think people shouldn't be surprised if there's going to be some delays.
Exactly. I think the forms part of it is the best thing that they've done. I think the whole 3-day thing is probably where, if there are going to be any speed bumps, that's where we may see them. Yeah.
And does it affect at all refis? Actually, those forms, but the forms are the same.
The forms are the same.
You don't have this,
for purchase or refinance. And this whole 3-day thing at the end, we're already sort of used to it because if somebody's ever refinanced their primary residence, there's a 3-day window of time built in there already. So when you sit down at a closing with a closing attorney on a Monday, you're signing paperwork, but that paperwork doesn't get recorded until Friday. there's a 3-day
That's
mandatory
on a refinance,
on a
right?
refinance of a
So
primary.
that stays.
Exactly.
So you could change your mind on a refinance within 3 days after the closing.
Exactly. So basically, if you got to the closing and you had a change of heart, something was wrong, you wanted to, it's called rescinding. You can rescind on the deal.
Now that is not something that you can do on a purchase.
Correct.
So once you close on the property, you legally,
everything happens
you
that
can
day.
rescind if you'd like, but legally you could have definitely some ramifications.
Exactly. Yep.
Okay. We have a few minutes left, so let's talk about anything that's happened with the credit standards. Is it more difficult to get a loan? Have some of the programs gone away? What are some of the things you've seen? And the other thing too is we're still rebounding on a lot of the people who had short sales.
Exactly.
They had to do a short sale on their property. They may have gone through a foreclosure. May have had to file for bankruptcy.
Sure.
How is all that affecting credit, and what's your pulse on that whole thing?
We haven't seen any major changes in the last few years. The credit, everything is based on credit score. So obviously, the better your credit score, the more perks you're going to get.
So you really work with people to teach them and educate them on how you actually get a good credit score, because that gets complicated too.
And again, getting back to meeting with someone like myself early.
Yeah.
That's a lot of what I do. If I'm meeting with someone today and they're thinking about maybe buying in 6 months down the road, I'm almost not even the mortgage person at that point. I'm sort of the credit helper. Let's look at your credit, see if there's anything on there. If we need to make any fixes anywhere, let's work on doing that. You kind of almost have the financial planner hat on too, to say, okay, I know you were planning on X amount for a down payment, but maybe we should do this or put a little more down or a little bit less. And one of the things that's changed in the last 2 years is we have a lot of clients taking advantage of a mortgage here in Massachusetts called Mass Housing, which is for owner-occupied mortgages. You can purchase a home or a condo with as little as 3% down, and you don't have to have any mortgage insurance. So that's been one big change that a lot of first-time home buyers, because they've been focusing on paying off the student loans or paying off the credit cards, they haven't saved a ton of money for the down payment. So it allows them to move into a property with a small down payment and be a homeowner.
Are there any restrictions on that program, and what's the kind
There are credit restrictions. In general, you want to have above a 680 credit score.
Now, is that for just that program or in general? So for the Mass Housing, it's 680. What
Mass
about
Housing
in general?
Yeah, in general, you'd love to have your credit score be over at least 620.
So that's really what you're looking to be.
Exactly.
Make sure you're above the 620.
Exactly. You want to be over 620, but even that, somebody with a 621 credit score can get a mortgage. They're probably not getting the best mortgage. They're going to take a hit on the interest rate. If they need PMI, they're going to have a higher monthly PMI. So
what score kicks it up to a point where you don't really get penalized?
Anything over 720. Once you get over 720, you're getting the best that's out there. You're going to have the best interest rate. If you need to have PMI, you'll have a lower amount for your PMI.
Okay, excellent. Yeah, I noticed too, because I've seen some from you. You send out how to get a 720 credit score.
Yeah.
Because there's things that I've noticed on my own. I get affected by. You may make all your payments on time.
Exactly.
But you may have too much. Your balance on your credit card might be too high.
That's the biggest thing. Yeah.
Opened up. In anticipation for buying a home, you've opened up, a Home Depot card and all these credit cards, and that's effective. So it's really good. And again, I've been helpful to myself to really understand how a credit score is, how they actually score it.
Exactly.
And know what affects it.
That's the biggest thing. Again, when I meet with people early in the ball game, we look at that stuff and we say, most people think, well, I pay everything on time, my score must be fantastic. But what they don't realize is that the payment history, so paying your bills on time, is only a third of what goes into figuring out your credit score. The biggest thing that we see with people is where they make a mistake is they may have 2 or 3 credit cards that are over 50% of the limit. So that's a magic number. What I always tell people is think about when you're getting ready to purchase a home, if your credit score is going to be really important to you, you almost want to think of the balance on the limit on your credit card. You almost want to cut it in half. So if you have a $5,000 limit, you almost want to say, my max on this card can be $2,500. You can keep your credit cards under 50% of the limit.
So it's under 50% of
Under
your limit.
50% and pay them on time, you'll see your credit scores jump up.
Excellent.
If you go over that, then you tend to actually lose points even if you're paying it on time.
Excellent. Well, great information, Ray. Geez, we had a lot of other things we were going to talk about, but we really... So how do people get a hold of you if they have further questions?
Sure. So my office is in Danvers. Easiest way would be 978-815-6806.
Excellent. And any website they can go to?
Easiest thing is probably just my email, rchouinard@mfsinc.com.
Excellent. Great. Well, thanks again, everyone, for watching. Jason's in the house. We really appreciate it. If you have any questions for me or anything that comes up that you're interested in or want to be a guest on the show or anything at all, feel free to visit my website, which is jasonparisellateam.com. We also have a YouTube channel, youtube.com/JA Parisella. We look forward to seeing you next time. Thank you.